Welcome to Crypto Gig 99. Every day on this channel, we will update you guys with up-to-date crypto news. So if you like cryptos, please feel free to hit that subscribe button and like this video for the YouTube algorithm. Here's the catalyst for Bitcoin's future growth you might not be aware of. The relationship between traditional stocks, commodities, and Bitcoin has been fundamental in the past. For instance, the March 2020 crash took place when the stock market faced its biggest dump in over 30 years, and Bitcoin investors were cashing out their investments for liquidity. Over time, however, the correlation has gone down. Alas, it is still indicative of a key trend taking place on the charts. At press time, the realized correlation of Bitcoin gold had dropped significantly, especially as BTC's price plummeted over the past few weeks. The same trend was observed with the S&P 500, since both gold and SPX have maintained an upwards trajectory. However, the key correlation that we will be discussing in this video is the relationship between Bitcoin and the US 30-year bond yields. Bitcoin v US 30-year bond yields uncharacteristic similarity? Unlike most other correlations, the similarities between BTC's movement alongside US 30-year bond yields are uncanny. It is definitely not a like-for-like movement, but both the assets have seen movements in the same direction over the past few months. Now, why do the US 30-year bond yields matter? Well, because they are excellent measures to analyze future market conditions. Now, there are multiple variables at play, but we will be looking at how the Fed is interconnected with this aspect. Federal reserves have printed the US dollar without keeping a strong hard cap over the past year. Now, after the Fed meeting last month, the agency has hinted at raising rates in the near term. What's more, while the Fed handed a bit of yield to the banks with cash, in the short term, it bumped up the US bond one-year bond yields. But what happened to the 30-year bonds? It nosedived on the charts. Ergo, the inference that can be drawn is that inflation is definitely expected going forward, and in light of the fact that the Fed will need to raise interest rates, it will only slow down present-day economic growth. So, where does BTC land in between all this? Right back to the fact that the declining 30-year bond yields are reflective of the current market situation. As the 30-year yields tend to rise, there is an expectation the economy will grow alongside it. Now, the case for Bitcoin comes from the fact that only a rising economy would be helpful for its cause, because Bitcoin tends to perform better when the collective market is moving forward. Hence, this is the catalyst for future growth. Once the 30-year bond yields start to recover, a reflexive positive feedback loop should create a better outlook for Bitcoin, one where rising prices mean better faith in the asset. JPMorgan says a lot of clients see cryptocurrency as asset class and want to invest. JPMorgan says a lot of its asset and wealth management clients think cryptocurrency is an asset class and they want to invest in it. Our job is to help them to put their money where they want to invest, said the CEO of JPMorgan Asset and Wealth Management. A lot of JPMorgan clients consider cryptocurrency an asset class. Mary Callahan Erdos, JPMorgan Asset and Wealth Management CEO, talked about her firm's approach to cryptocurrencies in an interview with Bloomberg Wealth, published Tuesday. JPMorgan Chase's asset and wealth management line of business is one of the world's largest investment managers and private banks, with $3.4 trillion in client assets. Erdos, who joined the firm 20 years ago, was asked what she would do if a client came to JPMorgan and said that they wanted to invest in cryptocurrency. Specifically, she was asked, "Do you say you shouldn't do it, do you facilitate it, or are you still evolving your position?" The chief executive replied by first commenting about blockchain technology. Blockchain technology, it's very real, and it's changing all of the ways that we digitally interact in the different financial markets, she opined. The JPMorgan Asset and Wealth Management CEO proceeded to talk about cryptocurrencies. Digital currencies are new, and in general digital currencies are being debated as to whether they are an asset class or not, she described, elaborating, "A lot of our clients say that's an asset class and I want to invest. Our job is to help them to put their money where they want to invest. It's a very personal thing," Erdos continued. "We don't have Bitcoin as an asset class per se, and time will tell whether it has a store of value. But the volatility that you see in it today, it just has to play itself out over time." Her comments echoed what JPMorgan CEO Jamie Dimon said in May when he personally advised people to stay away from cryptocurrency. However, He noted, "That does not mean the clients don't want it. I don't tell people how to spend their money, regardless of how I might personally feel about something." While JPMorgan may not currently see cryptocurrency or Bitcoin as an asset class, rival investment bank Goldman Sachs said in May that Bitcoin has become an investable asset. The firm explained, "Clients and beyond are largely treating it as a new asset class, which is notable. It's not often that we get to witness the emergence of a new asset class." The CEO of BlackRock, the world's largest asset manager, said in April, "I am fascinated by it. Cryptocurrency as an asset class. I do believe this could become a great asset class." What do you think about the comments by the JPMorgan executive? Let us know in the comments section below. Cathie Wood's ARK Invest buys additional 300K shares of the Grayscale Bitcoin Trust, GBTC. While Bitcoin, BTC, continues to trade under pressure, institutions are back at buying the dips once again. On Monday, July 19, Cathie Wood's ARK Investment purchased an additional 300K of the Grayscale Bitcoin Trust, GBTC. As reported by The Street citing the subscription to ARK's trading activity, the investment firm purchased 310,067 shares of GBTC at the price of $25 per share via the ARK Next Generation Internet ETF, ARKW. The net purchase was nearly worth $7.8 million. This is a second big purchase of GBTC shares by ARK Investments within a month's time. Last month ARK purchased a massive 1 million shares of the Grayscale Bitcoin Trust when the BTC price took a dive under $30,000. Thus, it's safe to assume that every time Bitcoin approaches closer to $30K levels, ARK makes a move to make more purchases. Interestingly, the fresh buying comes at a time when there's all the buzz going around about the unlocking of the GBTC shares. Even if any selling pressure persists post the unlock, giants like ARK are scooped more shares at a lower price. While short-term retail investors have been in a panic mode selling Bitcoin at a loss, institutional players continue to accumulate. ARK Investments is not a case in isolation. As CoinGape reported, Rothschild Investments purchased over 100K shares of the Grayscale Bitcoin Trust, GBTC, over the last quarter. Cathie Wood has been ultra bullish on the long-term futures of Bitcoin and the overall crypto space. Besides, she has gained immense popularity for taking some bold bets in the crypto space. Cathie Wood's ARK Investments was one of the early investors in Coinbase, Nasdaq, Coin, pouring around $250 million during its public listing ahead this year in April 2021. On Monday, ARK also purchased an additional 71,877 Coinbase, Coin, shares. Coinbase is ARK's third largest Bitcoin-related holding. The company has so far invested nearly $1 billion in Coinbase. ARK's largest holding in a firm with Bitcoin exposure is Tesla, Nasdaq, TSLA. Through the ARKW fund, ARK invested a massive $2 billion in Tesla even before the electric car maker added Bitcoin to its balance sheet. Last Friday, ARK also announced that it holds $53.6 million worth of Square, SQ, shares across several different ETFs. Cathie Wood will be speaking along with Square CEO Jack Dorsey at the B-Word conference on Wednesday, July 20th. Thank you for watching. I will see you guys in the next video.